Kia ora, welcome to Shared Lunch, brought to you by Sharesies with BusinessDesk. My name's Leighton Roberts and I'm one of the co-founders and co-CEOs at Sharesies. Today on Shared Lunch, we're talking about Apple, the world's largest company by market capitalization. To talk about that and the phenomenal run that Apple has had to date, we're joined by senior analyst Daniel Wu from Milford Asset Management. Before we get started, here's some important information.
Investing involves risk. You might lose the money you start with. We recommend talking to a licensed financial advisor. We also recommend reading product disclosure documents before deciding to invest. Everything you're about to see and hear is current at the time of recording.
Welcome, Daniel. Thank you so much for joining us.
Thanks, Leighton. Glad to be here.
Look, just to get underway, it would be great if you could give us a little bit of an introduction about yourself.
Yeah, so I've been sort of on the buy side investing for the last sort of 7 or 8 years. I've always been fascinated with sort of investing and understanding businesses and sort of, finding low quality businesses, owning them for the long term and basically sort of compounding returns. And I've been looking at Apple sort of on and off over the last sort of 6 to 7 years. So I certainly have some thoughts about that company.
Yeah, there's a lot of change in that last 6 or 7 years, even for a company the size of Apple. With what would you say are the main differences in the time that you've been covering them if you had to think back 6 or 7 years ago?
Yeah, I mean, I guess it's certainly true that Apple has had a very phenomenal run, not just within the last 6 or 7 years, but basically throughout its life. If we sort of just look back sort of 6 or 7 years ago, I think the narrative for the stock was very much still on sort of the iPhone. But we were starting to see that iPhone growth kind of slow down a little bit, and there were concerns about, what's going to be the next sort of growth driver for Apple. The smartphone market is getting saturated and becoming mature. And of course, over the last sort of 6 years, we've really seen the Apple services business sort of kick into high gear and basically drive a lot of the incremental growth that Apple has seen. That's not to say that the iPhone hasn't also been an important driver, because that is still a phenomenal product and a phenomenal business in and of itself. But the growth is sort of more balanced across several different segments now.
The services in particular is becoming a much larger theme, isn't it, in the presentations, the earning presentations they're doing. I think there's been some price changes recently that we're sort of expecting maybe in the next quarter we're really going to see that come to life a bit more. But what are you seeing in your coverage of that at the moment?
So in terms of the services, I mean, it's definitely the fastest growing and also the most stable growing segment that Apple reports at the moment. Last financial year, so the year ending September 23, the services business crossed over $85 billion of annual revenue, which is, quite sizable. And of course, growth is going to sort of start slowing down just as a matter of law of large numbers. And services is also by far the most profitable segment for Apple as well. Now, if you look at the services gross margin that they report, it's about low 70s. And then you compare that to Apple's product gross margins, which are in the mid 30s. So you can see why services has taken on, a very important position in investors' minds. Now, despite sort of the size of the services business already, we believe that there is sort of still a long runway for Apple to continue growing its services business. If we sort of take a step back, I mean, management sort of regularly disclose, qualitatively what the install base is, and sort of based on what they've said based on what they've said most recently, there's well over 1 billion active iPhones around the world. There's over 2 billion of Apple devices that are active around the world. So this includes things like iPads, Macs, AirPods, watches, etc. And Apple also has over 1 billion paid subscriptions on its platforms. So basically, if you look at the 85 billion, it looks like a big number, but then you kind of divide that by the 1 billion active iPhones globally and 2 billion active devices, and it ends up being like $70 to $80 USD per year per iPhone, which is not that egregious when you consider a Netflix subscription is something like $15 a month. So I think that sort of gives you that runway there, and also management sort of on the calls regularly say that the iPhone is sort of still gaining market share in most of its markets, and over 50% of people who buy iPads and Macs, even today, are entirely new to the product. So there's still a huge runway for all of Apple's products to continue growing.
That's huge. I was just thinking when you were saying then, but it's a great business model, really, isn't it? Moving into these, we know that SaaS or subscription type margins are great, and this is what we're moving into. And if you think, I think about my own relationship with Apple. If you ask me, are you an Apple customer? I would say yes, I am. And then you said why, and I would say because I have an iPhone and I use my MacBook. But then just prior to this, actually, I checked my credit card statement and just wrote Apple, and actually a pretty reasonable customer in those as well. But don't even really think about it. I'm interested in you as an analyst. Are you also a user of the products, and how much does that play into the information you have and how you assess the company ongoing?
Yeah, good question, Leighton. And I'll let you in on a little bit of a secret. I'm actually a very recent iPhone convert. Actually, at the start of this year, I switched over from Samsung. I think some of the user interface issues with Samsung are getting on my nerves, so I decided to just test out the iPhone, and certainly like a great product. There are sort of elements that are very good about the iPhone, and then some sort of elements that are not quite as good. But overall, I'd say that the sort of Apple hardware ecosystem is fantastic. Everything is just works so well together, right? You've got the iPhone that syncs with your iPad, and you've got the AirPods and the watch and etc. So I'd say they've certainly built a very, very strong sort of closed ecosystem.
So let's talk about Apple's Uniqueness. It's had a really phenomenal run. Everyone knows the brand. It's had amazing storytelling around it. So if you think innovation, often people will think about Apple and visionary founders and visionary leadership. But what else do you think has helped it being so successful as a business?
I think to really understand how Apple got to where it is today, I think you need to take, quite a big step back and have a look at its history. Apple's initial success sort of really stemmed from Steve Jobs wanting to create great products with zero compromise. And it also kind of stemmed from his desire to have, absolute control over the product and the entire user experience. So that sort of led to Apple basically integrating from hardware all the way through to the software and the operating system, which has sort of allowed it to create this very, tightly controlled but very sort of integrated and frictionless experience for users. And so if you look across the consumer hardware landscape today, I think Apple would be sort of the only company that has actually managed to maintain a closed ecosystem, whereby, if you want to use Apple's operating system, its software, or even its accessories, you basically have to use Apple's hardware. And vice versa, if you want to use Apple's hardware, you're basically stuck with Apple's operating system and its software. Now, some people would argue that having consumer choice or flexibility is very important. But in this case, I believe, and certainly Steve Jobs fervently believed, that most consumers basically just want a sort of tightly controlled experience that is well integrated and it just works, right? There's a small subset that sort of want the flexibility to change things on their phone, to side load things and etc. But the average consumer, our parents, they kind of just want to pick up a device and have it work. And then they want to attach an accessory and just have it work. So that's sort of what Apple has really focused on. And that's, been one of the main reasons why Apple has become as sort of dominant as it has and has had such a phenomenal run. And in fact, if you take a step back and look at sort of the launch of the iPhone, that came with the launch of the App Store as well. And I think this is a good anecdote in general for how Apple thinks, right? Is that you could argue that the App Store itself was almost solely responsible for launching the smartphone to the consumer masses. Because if you think back to sort of when the iPhone was launched in the mid to late 2000s, think about what the PC sort of Apple program download experience was. The PC was still a Wild West at that point. If you wanted to, download or install a program outside of the big sort of software providers that give you a CD-ROM that you can buy and install, you basically had to go onto the internet, which at the time I think was still a scary place for many people. You'd have to download a file, hope that it wasn't a virus or malware, install it, and hope you've sort of configured it correctly as you were installing it. And if it didn't work, you'd have to go through hours of troubleshooting. And then Apple comes along with this App Store that is sort of a curated platform of third-party applications where Apple has basically vetted these apps to be both safe and authentic. Oh, and by the way, they also have an in-app payment system that is not only super convenient, but also controlled by Apple. So you're not going on the internet and paying some random stranger money, or giving them your card details or your bank account details to download a sort of product that you don't actually know if it's real or not. You basically just go to Apple, you can click download on whatever app you want, and it's going to be perfectly safe and it will work on the iPhone. So that alone basically made smartphones what they are today, right? Can you imagine what the smartphone experience would be like today if the app download experience is similar to what it was for the PCs back in the 2000s? Like, I would say that smartphones would be nowhere near as ubiquitous as they are today.
I can't imagine putting a CD into it or anything, that's for sure. Apple is considered one of the sort of magnificent seven, making up across the seven of them a very large portion of the NASDAQ and the S&P 500 these days. And whilst it's seen as part of that group, it does still seem to do its own thing. And nonetheless does have a sizable influence with regards to the market cap and investor interest. So just interested how you see it working with these other companies and its impact on the market overall.
We sort of need to take a step back. This Magnificent Seven moniker sort of came about because of, these seven big tech companies that are sort of the largest market cap businesses in the world. But of course, these are not seven of the same companies or seven even similar companies, right? They've all got different drivers. And I think the one thing that sort of does connect them is the fact that they're all enabled to a great extent by the internet. So if you look at the Magnificent Seven, you've got sort of a group of aggregators, so Meta, Google, and Amazon to an extent. And then you've got sort of the strong network companies, which is Amazon and Meta with their sort of massive network effects. And then you've got Microsoft, which is sort of this enterprise behemoth that sort of takes the bundling approach. If you bundle together a whole bunch of good enough products, you basically have an unbeatable suite. And that's what we see from them. And then, Tesla and NVIDIA are both sort of driven by their own, mega trends around AI and electrification and renewables. And then you have Apple, which I guess is sort of this consumer tech business that, sells premium hardware at a premium margin. And I can't really think of any other consumer tech company that really does that. So it does kind of stand on its own. I guess to your point about it sort of being a big driver of stock returns and having a large share of the index, I mean, that's absolutely true, right? Apple is, I think, 7% of the S&P 500 index. And as a result, what you sort of see is that, at least for sort of active managers, Apple is sort of on average an underweight position for them, because even if you have like a very concentrated 20 stock portfolio, having a market weight position in Apple is still 7%, and that's still going to be one of your top positions. So for active investors, I think it's a little bit difficult for them to necessarily justify owning a market or higher weight in Apple. Especially if you sort of, think about, expectations going forward for Apple. If we look at Wall Street consensus expectations, I mean, revenue growth for the next couple of years is sort of in the 3 to 5% range. And EPS growth is, call it, high single digits range. And it's trading at a 28 times forward PE multiple compared to the S&P 500, which is trading on, I believe, 19 times. So you have sort of fairly similar earnings growth trajectories, but Apple is trading at like a 9 times premium. So I guess the question is always going to be, how much are you willing to pay, or how much of a premium are you willing to pay for a growth profile that is pretty similar to the market, at least over the next few years.
Just before we're going to dig into some of that stuff a lot more, particularly around those earnings, where they're heading, and sort of view on that. One of the things that I think is interesting and possibly part of the charm is the mystery, I suppose, around Apple, and it's very hard to know what they're up to. And I think from a consumer point of view, that does make for exciting releases and keep that side of the world amped. But how hard does it make your life as an analyst and for investors around the world? What should they be thinking with regards to that?
Yeah, so I mean, I don't think Apple sort of intentionally is acting very secretive just to sort of maintain some aura of mystique. I think it sort of goes back to their DNA. And again, Steve Jobs sort of all about creating great products with no compromises. And historically, like if you look at sort of the products that he led, basically if the product wasn't perfect, he wouldn't ship. And therefore it didn't make any sense for Apple to sort of announce new products early and set sort of a release date kind of thing that they work towards and may need to compromise on quality. So it's very different to say what Elon Musk does, right? Which is, the Cybertruck is coming this year, and then 2 years later, the Cybertruck is coming this year. So it's sort of different approach. But of course, that sort of does end up spawning a veritable cottage industry of online commentators sort of speculating on Apple products, right? And usually the speculation is still sort of pretty accurate. So whenever Apple actually does release something, it's never really comes as a complete surprise. It certainly does make investors' lives a little bit more difficult in the sense that, if you speak to the company, like their investor relations, usually the answer you'll get back is, just refer to what Tim Cook, the CEO, or Luca Maestri, the CFO, said on, the latest earnings call. So you don't get a whole lot out of them. I think if you're investing in Apple, you are sort of giving management the benefit of the doubt that they are doing something productive and innovative with the $30 billion a year that they're spending on R&D today. And, Apple's track record has certainly earned that benefit of the doubt. So there is definitely a sense of sort of trust in management to continue doing what they're doing.
The next thing I'd like to get into is the September results and unpack those a little bit. And I think very topical at the moment in businesses across the world is particularly any business that has relied on China for growth in any way has been what's happening in China. So what's your view on the slowdown in China with the iPhone? I can't remember exactly what the numbers were, but they seem material on the face of it.
Yeah. So basically, if we sort of just look at the high level, the results for the September quarter were sort of in line to slightly ahead of Wall Street expectations. You saw the iPhone return to growth, I think growing 3% year over year, which might have come as a bit of a surprise given the frequent sort of third-party reports coming out from the supply chain about demand being somewhat weaker than expected. Services also recovered to some strong double-digit growth after sort of growing only in the low to mid-single digits over the last few quarters. So that was a positive surprise as well. I think what sort of sent the stock down initially was perhaps what seemed like a relatively weak December quarter guidance. But I think that's a little bit muddied by the fact that there's 13 weeks in December this year and there's 14 weeks in December last year. So once you sort of adjust for that, we think the guidance was actually okay. iPhone is guided to grow on an absolute basis despite having one less week. That again is sort of contrary to a lot of the reports that we see coming out of China about weaker iPhone demand due to both the sluggish macro over there and also the resurgence of Huawei, which I'll touch on in a moment. And also, even in the US, I think the carriers this year have been a bit less promotional with their handset giveaways over this holiday period. So we'll see how it sort of all shakes out. I mean, there's certainly quite a lot of uncertainty for Apple in the near term. But, we have seen the stock sort of derate a little bit over the last 3 months. So some of that might already be captured in the price.
Sorry, I'm just going to, before you go too much further there, I'd just like to hear a little bit about Huawei that you were just touching on.
If we sort of take a step back and look at the China market overall, now the China smartphone market is very unique globally in the sense that digital life in China basically takes place on WeChat. Now, WeChat in the West, I think we just perceive it as just another messaging platform or a messaging app. But in China, WeChat is basically an operating system and a platform in and unto itself. So you could design and make the absolute best smartphone in the world, but if it doesn't run WeChat or if it doesn't run it well, then you're not going to make any sales in China. And this, of course, means that it's a lot harder for smartphone manufacturers to sort of differentiate their products because ultimately what matters is being able to run this application sort of platform that's controlled by another company. Now, Apple historically in China has sort of been a bit of a status symbol. And as you would expect, given sort of the price of, Apple flagship phones relative to sort of some of the lower end Android phones. But of course, as Apple's market share sort of continues to grow and as I guess innovation in smartphones in general sort of slows down, some of that sort of status, I guess, signaling effect wears off. And also sort of recently, we've seen this rise in nationalist sentiment in China, especially across the sort of younger generations who are sort of more proud of, their Chinese heritage and owning sort of homemade Chinese designed products. And we saw this most recently with the Huawei Mate 60 Pro smartphone that was released. And I think a bit of background on Huawei. I mean, Huawei was sort of placed on to the US entities list back in May 2019 by Trump. And that basically meant that, Huawei couldn't procure any components from Western suppliers anymore, including from Taiwanese suppliers. And that basically forced them out of the global smartphone market. And of course, within China, the biggest winner of Huawei leaving the market was Apple at the flagship end. So they were the largest share gainer within China. And now that sort of Huawei has come back with a leading edge sort of flagship phone that was made despite all the US sanctions, if this is a sort of permanent resurgence of Huawei, then I think Apple is going to be sort of the player within China that gets most impacted and lose probably the most market share, given that they did gain the most market share when Huawei was out of the market. And I mean, the phone itself, the Huawei phone itself has been received extremely well by Chinese consumers, right? The initial batch basically sold out instantly. And very quickly you had sort of netizens going onto Chinese social media talking about how proud they are to buy and own a Chinese designed and Chinese made phone. And you certainly didn't really sort of see that back even 5 years ago. So that does mean that, China might be a bit more of a challenging market for Apple going forward. But of course, they still have sort of a very, very big business there. And also on the services side, China's a pretty material contributor, I believe, as well.
Yeah, absolutely. So, super interesting on that, and it'll be interesting to see those macro trends. Can be big drivers because, of course, a lot of the US success in China was exactly that, right? Younger people really liking the Western design of things and wanting to be seen with that. So, I'm sure there's lots of people strategically at Apple thinking about that at the moment. Just moving on to the next sort of country or growth opportunity, I suppose, is India. The reason we're focused on these two is because for a long time, Apple's and lots of other companies' growth has come out of growth into these regions that they weren't previously. So I've got two questions here for you. One is what's happening in India with regards to Apple and what's their strategy there? I'm also just interested actually if India has any sort of Huawei type model yet, or I'm sure it'll come, but if there is a local device. And then secondly, you mentioned right at the start of our conversation the amount of people still buying Apple for the first time and how big that is. And I'm just interested how saturated you think the US is, as obviously in Europe as very large markets, and how much Apple will rely on growth in these other countries.
Yeah, great questions, Leighton. So I think on India first, I mean, Apple sort of basically every quarterly call, they're talking about sort of achieving a new quarterly iPhone sales record in India. So I think we can assume that India is a very sort of high growth market for Apple. Now, Apple doesn't sort of break out the geographies in that kind of detail in their reporting. And for whatever reason, India is lumped within sort of the Europe segment, which is, I think, like 25% or so, or thereabouts of Apple's revenues. But there are some sort of sources online that sort of point to India having done about 50,000 crores of revenue in the year ended March 23, which translates to about 6 billion USD. And that is sort of less than 2% of Apple's revenue. So very small absolute number and percentage contributor, but India apparently has been growing at sort of upwards of 50% year over year, so growing very quickly. And then you compare that to Greater China, which Apple does disclose, and Greater China is 19% of revenue. So big disparity there. But of course, there are a lot of sort of similarities between sort of India and I guess China, the China market, say 10 or 20 years ago. You have big populations, young populations as well. You have a sort of rising middle class and rising GDP per capita. And also, Apple has sort of been trying to diversify its manufacturing supply chain out of China, and one of the areas it's localizing in is India. And in fact, I think the iPhone SE, which is a sort of lower end phone that Apple released a few years ago, I mean, that was sort of almost specifically designed for the Indian market. So I think overall, so India is certainly a very important growth market for Apple. To your sort of question about whether there's any, I guess, Huawei-like competitors in coming out of India, not that I am aware of, or certainly none that have sort of the kind of potential to take market share at sort of the high-end level as Huawei does in China. To your second question, in terms of, I guess, the saturation of Apple products or iPhones generally, in the US, I think, regularly see sort of surveys saying that Apple is probably half or a bit more than half of the smartphone market. And I would imagine it's somewhat similar in broader Europe, especially in Western Europe, maybe not so much in the developing, the emerging markets. So I guess you could say that there is sort of this... this idea of iPhones becoming saturated in some of these large markets. Of course, you've still got sort of the services business there that is going to continue to drive growth, and then accessories and wearables and things like that. In terms of sort of data for China or India, I mean, I haven't come across anything in India, and I haven't come across really any sort of recent numbers in China, but iPhone share in China is still sort of relatively low just because it is sort of expensive. But of course, within just the flagship market, Apple's going to have its fair share there.
Yeah, nice. So definitely on the sort of the right side of the curve now, the bell curve with regards to adoption in some of those countries, but the services and they are looking for growth in other areas as well. Let's just, you mentioned a few about wearables, and firstly, how strategically important are things like wearables? I also just want to touch on the Apple headset, which is coming pretty soon. It's like a metaverse VR type thing. I think metaverse has got a little bit of a, it's a funny place as a word at the moment. There have been some large investments and high profile investments into it, not particularly successful. Are they doing this because they really think it's the future, or are they doing it because they just want to sort of hedge their bets a little bit there?
Look, I think Apple knows that smartphones are not going to remain the dominant computing form factor for the rest of time. So it is certainly wise of them to sort of explore new products and new form factors that could, replace or complement the smartphone, especially in this sort of AI-centric world that we seem to be heading into. If you sort of listen to Meta's third quarter results call, and you hear Mark Zuckerberg sort of waxing lyrical about his metaverse ambitions, the most interesting takeaway from that is that, Mark sort of having been a big proponent of the VR headset is actually, since this generative AI sort of craze has taken over, become more enamored with, I guess, the smart glasses. If you think about it, for this kind of AI to be useful, for an AI assistant to be useful, you basically want the AI to see what you see, want the AI to hear what you hear, and you want sort of a seamless way of interacting with that AI. And I guess, what better way or what better form factor than a pair of glasses that sort of sit on your face and, we'll see what you see and we'll hear what you hear. Now, that's not to say that glasses will be successful or that headsets will be, won't have a future. But it certainly makes sense that Apple is sort of exploring all of these things, and they've only announced the Vision Pro, right? We don't know what else they could be working on. I mean, they might be working on glasses, and for all we know, they might still be working on their car project, although that seems to sort of, be getting pushed back ever further. The thing to note, though, is that Apple has never really been first to market in any new product category. Like, Apple didn't release the first smartphone. It didn't release the first MP3 music player. Certainly wasn't the first with tablets or smartwatches or anything like that. But what they do really well is that they, again, create great products that have no compromise. And that is sort of how they come in and win the market despite not having a first mover advantage. And that sort of, I think, applies to the Vision Pro as well. If augmented reality or virtual reality is a thing, and the metaverse is a thing, and Apple sort of does take its sort of fair share or a dominant share of that market, I think it's going to be with a product that looks nothing like the Vision Pro, and it's certainly not going to be with like a $3,500 USD product, right? But in order to get from now to that point, you kind of have to go through the Vision Pro. Like with technology sort of this complicated and this advanced, like the only way that you can develop great products is to sort of iterate, right? Like you look at the iPhone, I mean, that sort of spawned from the iPod, and then you had many iterations of the iPhone before it became the product it is today. So yeah, I mean, Apple's not sort of building this Vision Pro with the hopes of selling millions and millions and millions of units, right? They're basically doing it as an engineering exercise to figure out, where are all the challenges? What are some of the things that are important and not important? What can we sort of design and develop in-house versus what we outsource? And where can we sort of really, maximize the differentiation of our product versus competitors, and then basically iterate from there.
Great summary, thank you. And I was thinking of that in the iteration process as well. They also turn that into lots of sales opportunities, right, along the track. I was thinking then of maybe Google Glasses was 10 years too early, and we'll see how that plays out. I thought we might just quick fire a couple of the last questions, which I think are important. But I want to touch first on Apple's AI ambition. How important is it to the future of Apple?
Yeah, so I think within the Magnificent Seven, Apple is probably perceived as being the weakest in AI. And I think that is sort of partly because of its secrecy. Like if you think about like the leading AI researchers, they are all sort of more or less academics, right? And academics want to be able to publish their research and publish papers and et cetera. Now, Apple basically never does that. So it's very hard for them to attract sort of top AI talent. And they can't outpay Microsoft, they can't outpay Google, they can't outpay Amazon, et cetera. So it really does come down to, allowing your researchers to do their thing and to publish their work, which as of right now, it doesn't seem like Apple is going to do. But of course, Apple sort of sells hardware. So I guess the opportunity for Apple within AI is to sort of be the, call it edge AI or edge inferencing, where, you have the large language models that are designed or developed by OpenAI and Meta and et cetera, and they get trained on data center clusters in the cloud. And then the inferencing could actually take place on sort of your iPhone. And that would sort of be the, the most frictionless and lowest latency way of doing it. And because Apple sort of controls the hardware and the software and, designs its own chips, it probably isn't the best position to design a phone or some other device that is perfectly suited for inferencing these large language models. So I think that's where Apple's sort of AI opportunities probably lie, rather than going out and developing sort of the leading edge large language model itself.
The next one is climate reporting. So there's been the infamous Mother Nature video that I think had quite mixed reviews, but they've set a goal and I think they've released the first product now in the last announcements around carbon neutral. But how are they going to hit their 2030 goals, and do you see that as being realistic?
As of I believe 2020, Apple has been sort of carbon neutral across its own sort of operations, and that's sort of largely driven by a mix of renewable energy and also carbon removal projects. And Apple sort of does have a goal of being carbon neutral across its supply chain by 2030, which does seem like quite an ambitious target. But of course, I think given Apple's resources, if anyone can actually achieve that, it's probably going to be Apple. Now, their latest ESG report sort of discloses that they've got, I believe it's sort of 70 or so of their top suppliers, which represents over 90% of their supplier spend, have basically made commitments to get to 100% renewable electricity within their own operations. So that's, one step forward towards carbon neutral. Apple's also been sort of dialing up the amount of recyclable materials that it's been using in its products as a way to sort of reduce, scope 3 emissions based on product lifecycle. I believe the latest number is that 20% of materials that go into Apple products are now recycled, and that number, continues to rise. I guess, to get a better view of this, you really do sort of need to read its ESG report and its environmental progress reports. Apple is, certainly disclosed quite a lot of detail, especially on their sort of climate and environment reporting, far more than a lot of other companies of similar size or stature. So it's makes for an interesting read. But while that sort of 2030 carbon neutral goal does appear aggressive, I think Apple is sort of one of the companies that could actually achieve it.
Okay, all right. Then now tell us a little bit about where the company is headed and any feelings or caveats you have around that.
Yeah, so I think, Apple is a remarkably sort of stable company, and Tim Cook has been sort of the CEO for, I think, like over 11 years now, right? And he's demonstrated that he can run a steady ship while also sort of pushing the innovation factor as well. So I think from a management perspective, Apple is definitely in good hands. Hasn't lost any of its sort of, build great products kind of ethos. The one sort of caveat that I actually forgot to mention when we were talking about the services business is that Google pays Apple a fee to be the default search engine in Safari. And that fee or that sort of search engine default deal has been valued at sort of by Wall Street analysts at between sort of $8 to $20 billion a year for Apple. And this is basically a pure profit, or as close to 100% margin as you can get. And the reason this matters is that the US Department of Justice is currently suing Google for anti-competitive practices with respects to this deal that they have with Apple, basically saying that Google should not be allowed to pay to have default distribution on all of Apple's platforms. Now, we'll set aside sort of the merits of that sort of argument by the DOJ, but clearly if the DOJ does win, then that is a risk to Apple if Google is no longer allowed to pay for the default distribution. That's a big range of estimates, 8 to 20 billion, but we believe that it's probably towards a higher end, given that during the trial, it came out that Microsoft actually offered Apple $15 billion for Bing to be the default search engine for Safari, and Apple turned them down. So let's say the deal is worth 15 to 20 billion. That means it's about sort of mid-teens percentage of Apple's operating income. So clearly, if that sort of goes away, then that's going to be a meaningful hit to Apple's earnings. Now, of course, Apple will sort of mitigate that over time because they can, and they've been speculated to be interested in getting into the search business and buying or building their own search engine, which obviously they would set as default, and then they'd reap the advertising revenue from there. Or they can find someone else to basically buy that default distribution position. Obviously, it'll be a lesser price because Google is not going to be there, but they can still mitigate some of the lost earnings in that respect. But yeah, we'll just have to see. We'll have to see what happens with the with the trial itself.
Yeah, it's a lot more sold iPhones, isn't it? At a 30% gross margin versus 100% on the offset. The last comment, last question we're going to ask today is we have to touch on the share price and the share price debate. So in your view, is Apple overvalued, and what do retail investors need to consider?
Yeah, so the topic of valuations is always going to be tricky or quite prickly, right? And if we sort of just set aside the disclaimers around this being not investment advice and for entertainment purposes only, what I would sort of say is that for investors, whether you're a professional investor or a retail investor, it's very important to sort of do your own work and come up with your own conclusions and valuation for any single stock investments that you make. Because as the saying goes, you can borrow ideas, but you can't borrow conviction. So you need to build your own. Having said that, Milford is not currently invested in Apple. We sort of exited our positions earlier in the year. Now, is that to say that Apple is not a good business or Apple is overvalued? Absolutely not. It just means that for us and our sort of relatively concentrated portfolios, we see sort of, I guess, more compelling ideas with more prospective returns or, risk-adjusted returns than Apple. But of course, Apple's still a great business, and there's always going to be a time that you would own it. Now, I guess how a retail investor could think about valuation would be that, if you just take a simple sort of multiples approach, you look at what Apple is kind of trading on, and it certainly has sort of had a lot of multiple expansion since the start of the pandemic. Currently trading on sort of a 28 times forward PE multiple, as I mentioned earlier. And this compares to less than 15 times average for the 5 years before COVID. So that's a big step up. And I guess the growth profile, has been quite strong during the sort of initial pandemic years because of stimulus and because people were sort of locked up at home with nowhere else to spend their money. But coming out of that, we are sort of seeing growth kind of slow down a bit. So I think you need to balance up the multiple that you're sort of paying with, the earnings growth profile that you sort of expect over the next few years. And I guess taking a step back further, for Apple, it's sort of not just, thinking about how many iPhones they're going to sell in X number of years, at what price, and, what services are going to grow at, but also sort of you need to kind of assign a value to the Apple brand and how much you think the Apple brand is going to be worth, and then I guess how much you are willing to pay for that brand, and then that growth profile relative to all the other investment opportunities that are out there.
Really, really helpful stuff. Thank you, Daniel. And just to add one other thing to lots of investors, particularly those listening from the Sharesies platform, S&P 500 ETFs are the most held instrument on our platform. And as you touched on earlier, Apple makes up 7% of that index at the moment. So if you don't think you're an investor already, many of you probably are, and to a reasonable portion just through that. Hey, Daniel, I just want to end by saying thank you so much for sharing your expertise. It's been really insightful. I've learned heaps today, and I'm sure our listeners as well. And I'm hopefully have you back. And thanks to Milford as well for sharing you with us today. So thanks for tuning in, everyone. You can watch Shared Lunch on YouTube or follow us through our podcast, which we have available on Apple, Spotify, or wherever you get your podcasts. Leave us a 5-star rating and a comment with who and what you'd like to hear about next. We have a special offer for Sharesies investors from BusinessDesk. So if you use the promo code SharedLunch2023, you'll get $100 off an annual subscription to BusinessDesk. It's usually $249 inclusive of GST. The offer only applies to new BusinessDesk subscribers and can only be used once per subscriber, and it can't be used with any other discounts. Thanks for joining us, and enjoy the rest of your week.